Hi everyone, welcome to another episode of DeNites TV. My name is Miguel Magalhães, and with me I have two people who are going to teach me a little bit more about trading. With me I have Francisco Macedo. Francisco, how are you doing?
Hey Miguel, thanks for the invite. I'm glad to be here. Yeah, it's
Really
always
nice.
fun to talk about trading. Yeah, so
Yeah, really nice to see you again. And with me another person that I haven't seen in some time as well, which is Marco from Uphold. Mark, how are you doing?
I'm doing very well. Thank you so much for having me, and
Uh,
I'm really looking forward to also learning a bit about trading.
This is going to be a fun conversation because with me I have someone I can call a professional trader and that has made a career out of making trades. He has some experience. Francisco has some experience, had some experience in blockchain.com. Now he has a Web3 startup that's helping to invest in artists in a really early stage. So I'm looking forward to look with that. And the startup is called Stage. So that's a fun thing. And Marco is the chief innovation officer of Uphold, which is a leading crypto broker around the world. So he has the knowledge, not necessarily as a trader, but as the platform works. So it will be a very cool to have his feedback as well. And so I wanted to start the conversation not necessarily by discussing trading strategies, because I think that would be a boring conversation. I wanted to discuss with you how trading has evolved as a phenomenon in this last couple of years. It was seen for a long time as an activity that was only reserved for a couple of people that had access to that ways of investing. And in these last years, what happened with the internet, social media, and a lot of platforms like Uphold that started to be in the market, people started to freely trade at a distance of a click. And I wanted to get your feedback of if that was a cool thing for the markets, or what were the advantages and disadvantages of that happening in the market. And I wanted to start with you, Francisco.
well, that's a very tricky question, because everyone would expect me to just say, oh, trading's amazing. So of course, if I can just go on a click and do it, it's amazing. But not really, right? Like there's been a lot of kind of a dilemma in my head around all these, because technology is amazing. Yeah, you can trade much more simply than before. But at the same time, it creates kind of a problem because there's a lot of people, nowadays in the 21st century, kind of going like, you don't need a salary. All you need to do is just be smart about making money. And I agree, and I could just mention the Rich Dad, Poor Dad book, which is quite well known, where the main thesis is that if you just work for someone, it's the worst way to make money, right? Because you're going to pay tax and all of that. So in theory, definitely career in trading and investment makes a lot of sense, right? The problem there is that because of the easy money thing, people just go for it without even knowing what they're doing, right? And I think it's a big problem, just like in gambling or whatever. Like, as long as you see easy money that you can make, it becomes very, very dangerous, right? And I've seen a lot of people, and even now when I say I do trading professionally, that's I made most of my money literally, and people go like, oh, you are one of those people just in their screens doing some random stuff, and I'm like, not really, like it's not just going there and making easy money, and I think it's that misconception of the easy money that just kind of blows the whole thing up. And I think of course with Marco there, having a platform like that, it's definitely a good thing, but at the same time, education of people is really important, because it's very simple for people to just go and like, oh, my friend made a lot of money, so of course I can make it, and they just go on crypto, they start buying. And yeah, I think education is a big problem. If you have the tools in your hands, you have big guns now, because you can take a platform, just do one click and throw 10x leverage and start doing it, but yeah, it can be very dangerous. So I would say in the current society, there needs to be a lot of more education. I don't think it's a problem of trading in specific. I think people need to be more educated before they go for it, right? Because you cannot start gambling almost 100K without trying things and seeing the psychology of it, and learning a lot about that. So that would be the start. Of course, I'm always very cautious because I do think people need to first study, work hard, because making money in trading is not about easy money. It's really hard work. It was a lot of years to get here. So
Yeah, but Marco, this perspective that Francisco gave, what should be the role of the platform? Because of course it's always good to have more people investing as a theory, of course, but at the same time you need to balance the effort you make to try to attract more users with the effort you make to make sure that they are aware of the decisions that they are making and that they have the resources available to make sure that they are having that decision. What has been within Uphold? What have you felt that has been the work that you guys have been doing in that regard?
Yeah, so I fully agree with what Francisco said. There is a role that if you want to build a sustainable industry, a reputable industry and service, there are certain things that you should care for and do for your audience, because if you're not doing that, you're leaving a vacuum that may be filled with stuff that you don't want to to see. Like you will see scammers giving away information, because people will be thirsty for information and they will be getting it from wherever they can. And if it's wrong, they will get screwed, and that ends up contaminating the industry. So if we want that to be sustainable, we have to do whatever we can. But as you point out, that also has to be a balancing act, because there's also the business itself to run. We have to be competitive, and there is certainly a degree of uncertainty in everything that we're doing. Trading is not it's not fortune telling with 100% accuracy, you know. So of course there are techniques. There's a lot of very complex things that you can do, and some simple things that you can do. But most people will not be professional traders. They will not be capable of doing everything that they should be doing to cover their bases. So yes, we try to simplify as much as we can all the information and market signals, and even do the research on assets that we have on our platform. So we do have information on each asset that we have on our platform. On top of that, we don't just list anything in there or on the platform. We do have a committee that is constantly looking into the market and assessing whether a certain project has value validity. So of course that's very subjective, but we do the best that we can to assess the validity of other projects. Of course there are certain things that are table stakes that if the project wasn't so well known, we might not have listed it. But because there's a market demand for it, who are we at one point to reject listing something that the market is clearly asking for? But when it's something that is not so well known, etc., that's especially when we try to be very careful about what we list, and we keep a close eye on that, so that our users are as protected as we can protect them. On top of that, we have many things that we run. We have a mailing list on Uphold Unboxed, where every day we cover what's happening in the industry, so that people can follow the most relevant events happening. We also do a very short 1-minute video, the up of the day, where we do something similar, but a much shorter format for people who don't have time to even read a full email. What else is there?
A lot.
Yeah,
There's a lot.
Already a lot, just to be educating people on how to do this, and informing them on which assets they might want to invest on or not, but always keeping in mind that we don't actually tell them invest in this or invest in that. That ultimately that has to be either a professional investor's advice, or it has to be the individual who has to choose what they're doing. It's not something we can do for them.
Yeah, but moving to a little bit to trading as a phenomenon, I believe that some of the challenges that even became like a media theme across these last 3 years, of course, was with the pandemic. There were a lot of people that they were just bored at home. Most of them, and many of them, probably actually like to gamble on games or things like that, but suddenly they didn't have any sports that they could bet on or cover the games, and they moved into trading. So I truly believe that the wave of new users started within that period. And of course, it gave cases like the GameStop and the AMC and all of those things that have pretty much covered. And a lot of course, crypto assets have faced that evolution and certain situations as well. Do you believe that trading becoming like, or being to become like a social cause and social movement for some people, that now with platforms that are available, they just can get together, they talk about whatever they feel about an asset, and they can get together to provoke like some sort of movimentation in the value of an asset, is a cool thing sometimes, or it has given like more trouble than actually good for whoever works in the financial markets? Francisco, I can start with you.
Oof. I'll have to come back a bit to the previous point, right? So you even separated, the sports betting and the trading. But to be clear, like I started my career as a sports betting trader, right? So you can trade in sports betting, right?
But the point can even be that right now with this new surge of new people, trading for some people, or for the most cases, became like a gamble more than like an actual investing vehicle, right?
Yeah, that would be my point. I think, if you look back at sports betting, right, you could separate sports betting professional trader from the sports betting, the person who's having fun, because, right, someone just betting on, Benfica Sporting. Oh, of course, I bet on Benfica because I like Benfica. Okay, that's not professional trading at all. And I was doing it professionally. Like, I didn't care about the team who wins. I was just looking at numbers. I was looking at stats. So in trading is exactly the same. In trading, in the Web3 sense, whatever you want to call it, right? Because you will have the people who are there to make money, and you will have the other people who are convincing themselves they are there to make money, but ultimately they are playing a game and they're having fun, right? And that's totally different. If you are there with criterion, if you are doing it, in some methodical way, it's totally different from, just not bothering with the stats. Just as Mark was saying, you hear some scammers saying, oh, this coin is amazing. And then you have this thing in your head saying, oh, I have an edge because this coin is amazing, and then you have an excuse to go for it, right? And then your wife tells you, oh, but why are you losing so much time on the computer? It's like, oh, but, I'm trading, I'm making money. And in practice, people are just gambling, they're just having fun, but they have an excuse because they are pretending to be making money, right? And so there's a huge separation between taking this as a game or taking this as a professional career. And I think with Marco, like, they are offering something that's amazing. If you admit to yourself, okay, I'm gambling now. And that's the problem with people sometimes. They don't really know where they stand, right? They look at some platforms and they think, oh, look at me, I made this money, right? And then there's all these psychology effects of like, oh, I made money, so I'm so good. Now I'm always going to make money. And then you lose. Or you lose money and then you want to compensate for that. And you try to force winning money. You lose again, So the psychology of trading, and like I would say, to be a professional trader, you need first of all to find the edge, of course, and to find a way that you are always beating the market somehow. And it can be through information, of course, even though it doesn't need to be inside trading, but you always have people around you that may give you some hints, and you may have very good network that helps you with information. But more than that is really the psychological control and the risk management skills, right? Because if you just keep kind of putting all your position in one thing, and if you just try to get 10x leverage because of course Bitcoin is going to go up, I mean, yeah, you can blow up still, right? And so it's all probabilities. Like, there's never 100% events, right? And so the risk management, the portfolio management, all these concepts, like I studied mathematics for a long time, it's not just random that you pick some coin and you become rich, right? And so I would say that's the point. I think people need to admit that. And I think just like in sports betting websites, you have these kind of warnings, like, be careful what you're doing, this is just a game. Either you take it as a game or take it as a professional career. That's it. But you need to be clear on where you are. Otherwise, it becomes very dangerous. Again, that's it.
Yeah, but there's a difference, right? Because in the end, when you are just trading, right, if you can get sort of people to invest in the same stock or in the same active, you will have a direct impact on the value of the company that's behind that asset or that stock. And in sports gambling, if you bet on a certain team or a certain player to score more points, that doesn't necessarily affect. It can affect, of course, cases where referees or things like that, or players can be. But the usual case, it's that what you invest or in a team or what you bet in a team won't have a direct impact on the outcome of a game or on the performance of the team, right?
But most of the times you are not going to have any impact, right? Even if you think you are, you cannot move a coin. Some people tell me like, oh, what's the insight on Bitcoin? I'm like, how can you have insight on something that, has $1 trillion market cap? Not now, but you are not going to move. Of course, some people are able to do that, and of course, in some cases, more legally than others. But I mean, overall, you cannot just pick 20 friends and say, let's all buy this thing and to go up. I mean, that doesn't work. And again, probably because of misinformation, people think it's that easy, but it's not, right? Depends on the market cap of what you're talking about. And then, of course, there's pump and dumps. That's clear, like some people do that and they push a coin up and then they sell it and all that stuff. I mean, again, regulation is still not clear enough on those cases, but yeah, of course, you can try that, right? You can call that a type of edge if you just pick all your friends and they're going to buy. But in the end, just a Ponzi scheme, right? Because you buy before your friends and your friends buy, then you sell it. Oh, okay. You just kind of get the better of your friends. That's it, So
I think there's also something to be said that today you have so many digital influencers, people, even very average people who historically would have a very small platform to broadcast a message, but suddenly they have 50,000 followers, 100,000, 500,000. And if you get enough of those together, of course, all of those constantly pushing out a certain narrative that might create a feeling towards an asset, either positive or negative, that can influence certain events to happen. And I think this is the kind of things, or these are the kinds of things where regulation comes in and can help retail investors and even the industry at large, because until you get something like that under control, you will get very bad people trying to take advantage and pushing out false information. And you will also have very bad episodes where people just lose money. They get the rug pulled under their feet, and yeah, we need to change that. I'm not going to say that I'm fully keen on all regulation, but some regulation, as long as it's well crafted and it really tries to help the people in the industry, or trying to take advantage also of the industry, not at the expense of the investors or small investors. So there's something to be done. It's not like we can run a market like this wild and free. But we also have to be mindful of the kind of regulations that we put in place to also support a sustainable industry that can grow and continue to create opportunities.
Yeah, and what you mentioned about the digital influencers is also that fine line where they sell like education in the form of investment advice, which is often what happens. Like, hey guys, I'm going to teach you on how to invest or on how to trade in certain things, but please do this by investing in these 3 things. And that often has been the case where most people have actually then like complained and any things about it. But we were talking about regulation, and I do believe that this last couple of months and this last year hasn't been really easy on exchanges and on platforms that kind of allow users to invest in assets, and especially in this case in cryptocurrencies. And you were talking about regulation. How do you feel that? I don't remember who said it, but do you believe that most regulation that it's being discussed is not necessarily around Web3, but around the people that can use platforms to trade cryptocurrencies? Because there's a distinction, right? It's that like you have like Web3 is a whole world. It's not only crypto, and regulation, when it's discussed, is mostly associated with these exchanges. So which part, or what do you feel that should be regulated, or what would be like a healthy regulation? Marco, sorry.
I don't even know how to answer that.
Or what could be a starting point? I mean, of course, like you are not paid to know that, but what do you feel like, given all that has been said with FTX and with other problems that exchanges have had, what do you be that should be the starting point? Of course, you don't know like the whole a whole regulation, but when you start to discuss like implementing some laws, what could be a good starting point?
So I'm not a regulation expert at all. I come in mostly from a technology point of view, but certain things that I think we need to be very careful. Just using for the recent FTX example, Making sure that customer assets are actually there. There is collateral and the kind of collateral that you have. So I think we need to build more transparency into this industry, because there are some very tricky things that you can do that simulate or can simulate that collateral, but it's all very unstable. Just like we saw with FTX, at one point, you realize that most of their collateral is on their own currency, but that's not what the customers actually put there. So that leaves customers in a very fragile situation where they trusted this platform with their assets. They expect it to be there, but it's not. So I think there's a lot we can do there. That's actually one of the things that we do at Uphold very well. We're completely transparent in terms of the assets that we have. We have over 100% of our obligations to our users, and we don't loan out assets to customers or to anyone. So if you put it there, it's there. We don't suffer from the bank run problem. So I would say that's probably number one issue that needs to be handled, because it's a complex industry where you might be able to generate very substantial amount of value around an asset without I don't want to say without an underlying reason for that, because there are reasons for that to happen, but often it's a lot of speculation. Of course, there is potential associated with it, and that as long as potential is articulated, you might be able to capture a lot of that value. So it's not to say that it's undeserved, but at the same time, it's very volatile. And if something happens for the worse, you might end up losing a lot, if not all, of the value that was supposed to be there, and your customers are left with their you're left with your pants in your hands, and your customers don't even have their pants. So I would say that's probably issue number one, that we need to cover. These platforms, these services need to be a lot more transparent as to what they do with customer assets, and that would probably be the number one thing that I suggest.
Guys, the conversation will continue soon, but firstly, a message from our sponsor, Stage.
Hey guys, so I'm the CEO and co-founder of Stage. My background, as we are seeing in this discussion, is more on the trading side. So I've been managing money pretty much since very young. Started with sports betting and now moved into crypto a couple of years ago. And what I realized was that trading wasn't that fulfilling in terms of mission and impact in the world. And so I decided to co-found a company, a music company, where we actually bring the concept of trading and investing in a way, because we allow any person to just vote for their favorite artists in a social media platform. But these artists are upcoming artists, which means you're actually voting, but also investing in these artists early on. So this is like a The Voice, X Factor, American Idol type of show, where you vote in the context of a competition, engage in competitions. But when you vote, you get an NFT, you get a digital card for voting, which means later you can actually sell it and make money out of it. At the same time, when you vote with money, so the artist actually gets money. So you are funding the artist, at the same time you're investing in him. And so that's really kind of the groundbreaking concept that I hope will be live in a couple of months. And then people can just use the social media platform to invest in artists early on, and at the same time we're helping the artists with their careers.
Francisco, in the view of a trader, not on the platform, of course, there's been different views on, for example, income generated by trading should be regulated in different countries. There's not necessarily still a position here in Portugal, but other countries have already started. How do you feel that what should be the view on that? Should it be like what we already do, for example, in Portugal with the income that you get from investing in stocks? Should be something like that, or should be something completely different?
It's a tricky one, of course. I mean, Yeah, I think from my side, like, yeah, as a trader, you don't never want to pay income on anything, of course. But no, but I do understand, and I do think, you know, with the volatility levels, and since it's trading in the end, right? Like, you are not buying Bitcoin to actually use it in general, and that's really where the separation comes. Like, if you can argue that you are actually buying it because you want to hold it, then you shouldn't pay. But at the same time, if you are just buying and selling, and that's really what the regulation in Portugal is now kind of doing, that split, right? It makes sense, right? So if you buy Bitcoin to accumulate for a couple of years, I mean, yeah, you could be charged when you sell it because you made some money, but at the same time, you actually held that, right? So you could actually argue that that's a coin that you hold, right? And so, yeah, it's like when you exchange euros for GBP, you know, or whatever, dollars. I mean, yeah, you're not gonna pay directly on that, which is just a conversion, right? But yeah, it's a tricky question. I think I will go back to that discussion around FTX, because I do think, again, it's a point that's very subjective, because on the one hand, I do agree, and that's definitely the case. People shouldn't, an exchange should never have as assets like their own coin. That doesn't make any sense. The fact that people deposit funds and they are kind of moving the funds around and playing with them, pretty much, it's just a joke. But at the same time, and again, I keep coming back to the kind of retail trader advice. I think people should never own all their assets in one exchange, right? Because even if you make a lot of money, you still have third-party risk, right? Like, there's still a probability that this place just blows up, right? That's part of the risk management, you know? And so if you are trading Bitcoin, you should own it in 5 different places, you know, at least. And as much as possible, only trade and then just move it out, right? Because an exchange is not made to keep the money there, right? Like, you trade Bitcoin for dollar for Bitcoin, you did your trade. If you're not trading again, just move it to some wallet that's non-custodial, right? So we didn't touch that custodial versus non-custodial, but yeah, so if the exchange actually owns your funds, you need to take into account that you have that risk. If you actually own the funds and you are trading in a place that it's non-custodial, then of course it's different, right? But in that point, you need to kind of put that in the equation, right? Like, when you think, how much do I owe? How much do I own? Like, you know, what's your portfolio value? You need to also take into account that there's a probability that it doesn't come back, you know. And of course, it was a bad scenario, very bad. But it still should teach a bit people around kind of centralized places against decentralized, you know, and how it's different to know where the funds actually are. But then it brings kind of an old discussion, which is, okay, we are talking about Web3, but if you look at Web2 and if you look at banks, and how do you know where the money is, you know? I mean, it's a number, right? Like, you have this bank balance. Oh, okay, I have a lot of money. Amazing. Well, how do you know, right? Like, we have had cases in Portugal of banks that, you know, you have your funds there. Oh, actually you don't, right? So again, like, it's quite easy for people to just kind of point at Web3 and like, oh, the regulation is terrible, things need to be fixed. But ultimately, the points in Web3 are pretty much still the same that you have in other places. But of course, it's less likely that a bank blows up rather than, you know, an exchange at this stage. But at the same time, yeah, I wouldn't kind of go and say, oh, Web3 is missing a lot of things, because in the traditional world, I wouldn't really trust a bank and think, oh, my funds are obviously safe. Like, that's a joke, and people should really deconstruct that assumption and almost treat it as like third-party risk in a way. So yeah, it's a subjective point, I think. Yeah.
And what you're saying, because suddenly the regulation conversation occurs in either one of two situations, right? Either something went really well and people want to repeat it, or something is going to a harder period, and suddenly there were some cases that gave space for the conversation to happen. We are currently in a bear market, and a lot of people that came with the bull market where everything was going really well and everything was increasing, now they are probably just like quiet or not doing something, and the people that were actually already there first, they are the ones that keep trying to do things either in trading terms or in building terms. Is this period, and I'm going to start with you, Mark, in this period where probably some of the people that became like I won't say like professional traders, but people that became like the regular ones or got in touch with trading crypto during the pandemic, how do you bring these people back, or how do you gain their trust again, or how do you try to convince people that this is a good investment vehicle for them?
You do many things.
Yeah, there's a lot of you can go by steps.
Yeah. So
on individual terms with this, on the others.
No, you have to try different things. So depending on your profile or your individual situation, if you're still holding funds, so if you're holding assets that have severely devalued, I mean, you can offer certain products that will generate some yields, and that's one way to keep people engaged and trying to get them to benefit from a period where they don't really want to exit their position. If they have lost their funds, that's different. What I mean is, if they exited their positions at a loss, then I mean it really depends on why you joined. If you joined gambling, it depends on your risk appetite to come in again. But I think ultimately you need to continue making sure that your product, your service, is more stable, offers better service, better features, more of what people are looking for, and that can mean a more usable service, something that is easier for you to understand, to manage your assets, your opportunities and risks. It can mean trying to build something that makes you more of just a trading platform, which is our case. For instance, we go beyond just being a trading venue, because when the markets are down, people will be a lot less keen on opening a trading app and doing trading. But they will still be paying for stuff, for instance. So if you can build something that is useful not only for trading but for something that you do on a daily basis, then you can sort of penetrate users' lives and be their companion, their financial companion, and hopefully live out this terrible time. And when we come to a better moment, then they will be happy that they stayed with you, they didn't exit their positions, and hopefully they will be able to take profit on those positions. What else? You can continue to try to do better regulation wise. So if there are incoming changes in terms of regulation, or if there's just a change in the sentiment of the market, you can try to assure your customers and potential customers that you are doing as good as you can. Assure them that everything is there, that you are doing things by the book, even when there isn't really a book telling you how things should be done. But you will try to be as transparent as possible, so that you build that trust. So it's not really a single thing that you do that will deliver everything that you're hoping for. You just need to clean up your act. You need to introspect. And see where you can do better and continue to deliver more value to users. And hopefully, if the industry continues to grow and improve, at the end of a winter, you will have a fantastic product and a fantastic service, and the people who stayed with you will be very happy, and they'll be telling other people that, this was great, and I continue to use this app. It has served me well during the terrible times. So yeah, I would absolutely advise you to get on it. So that's sort of our strategy for this.
But Francisco, for the next generation of investors, for example, when you started to trade, you didn't learn in anywhere on how to trade, right? You had to learn by yourself, right? What is some of the steps for the coming years with whoever comes to this world? How can investing, either trading or in any other way, but become like an integral part of like education within universities, schools, or do you feel that it should be something like the path that you have? Because as you said, you came like from mathematics and data science, and then you went to become a trader. But most people don't make that transition, or don't have necessarily that knowledge about probabilities or studying the evolution of a stock or of a crypto coin. What do you believe could be the answer for the next generation of traders, depending on the frequency that they trade?
I think it's again a question that's not even a question about Web3, right? Because everyone can take eToro and any platform nowadays and just start buying and selling stocks. So I think there's an important difference there. So if you do believe in some Apple, whatever. If you want to buy, just go. It's not trading advice, okay? Not at all. but yeah, if you want to buy some random stock, of course, then you can just buy and hold, right? So that's fine. But if you want to really trade like short term and all that, you need to really have training, even psychological training, right? Because there's a lot of traps you fall into, right? And I always say that first of all, you kind of have an idea of what the market's doing, what you should be buying, what you should be selling. But then there's a big part that's really psychological, right? Because of course, you also have most of the trading nowadays automated. But in most systems, there's still a little part that has a trader in the end, like making decisions, right? So at blockchain.com, for example, I was in charge of 300 million. And there was one day when the algorithms failed, right? So I had to trade 160 million by hand, go there, close position, So in that moment, unless you have the experience, unless you've been in that position, unless you have really been kind of training to be under pressure and all of that, and this is something that comes also with experience, but people cannot just go on a platform and try to trade like all the money they have because it's fun, right? They need to start small, test, see what's happening. You don't learn if you don't, unless you lose money, you never kind of learn the lesson, right? So when you lose, you should learn, right? And that's really how it goes, right? I started, 15 years ago, right? So the funny thing is that I was doing mathematics and I was doing data science, the PhD, but at the same time, I was doing sports betting, like trading on sports betting, right? So this was not like after studying mathematics, then I could do it, Of course, I had the capabilities in terms of the mathematical kind of the reasoning and all that, but the most important part ended up being I learned the hard way. When I'm making money, I feel like I'm the king of the world. Then you just lose because you think you're going to win at all times. And the other direction, like I mentioned before, like sometimes you are losing and you're like, no, I shouldn't have lost. And then you get kind of affectionate about the money you lost, and then you just try to recover and force it. That's really two of the main traps that you go like and you face. And only time can just make you more kind of objective and less rational, less emotional about it, right? And you cannot look at the previous trade unless to look at it and see, okay, what went wrong. Even when you win a trade, you should look at it and think, okay, was I lucky or did I actually deserve it? And all this analysis is just something that there's no place where you can study it, and you are right about that. I think there should be more courses on this. But I think online you can find pretty good courses, actually, if you really want to dive on it.
But is it something, for example, as platforms, for example, as you do more things within the platform, and I'm not trying to make like a comparison if it was a game, but when you're playing like a video game, when you go across certain levels, you kind of have some guidance on what you do next in order to do well. Is it possible to do that in trading? For example, if you only like able to start with a certain amount and only if you get X success or reach certain levels, you can like move up the level that you're able to invest. Would that make any sense?
Yeah, I think on my side makes a lot of sense. But the thing is, of course, you don't want like sports betting websites are not going to tell you, oh, sorry, you haven't proved that you can make money, so you cannot bet more than X, because they actually want you to bet more, And so that's really the problem. It's always the contradict, like the dilemma between what's ideal and what's right for people, and actually optimizing revenue, right? Because any platform wants to maximize revenue, and if you have all these people throwing money at you, of course, it's kind of part of the moral stuff, But you are providing a service, and of course, I'm focusing a lot on sports betting websites just because to kind of draw that comparison that when you have a trading platform, it's pretty much that, because nowadays you can take 10x leverage. You can just kind of, and as you were saying, people shouldn't even use leverage unless they really understand the risks. And what happens in the platforms is you look at it and they says a message there and says, oh, if you understand it, just tick. Oh, of course I understand, and then you don't,
yes,
right?
Yes, I accept the terms.
Exactly. It's like terms and conditions. Of course I know everything. Yeah. No, and so I think, there's a lot of work that needs to be done on that front. Ultimately, it's really kind of, if you have platforms that are really more interested in teaching and that have this kind of impact vision of like, let's help people make money, it's different than if you're optimizing revenue, right? And I think that we still lack a lot of platforms that think in that way, And I think personally, I learned the hard way, and I do think it's part of people's fault to just go on a platform and think, oh, it's easy money, let me just try to leverage my position and everything. But a lot of people just don't really know, because they look around on social media, everyone's making money, they claim to be, of course, and then you just think, oh, I'm just missing on this, right? It's the fear of missing out, like very well known. And like when you see everyone making money in crypto, you just go for it and you try, right? Like I can tell you a brief story. So I was in blockchain.com. I was handling like the VIP clients, like prime clients. So they were like trading up more than X, And so in theory, these were people who understood trading, right? And a lot of people that I talked to, they'd just been scammed, right? So for example, there was this German guy who had accumulated 300,000 all his career, years of working, right? And he retired and he was like, oh, I want to just go into crypto. Like, what's the best way? He just went on a website, seemed legit, right? So he goes there, puts all the money, right? They go away with it, you know. And this happened weekly. Like I handle people like this weekly, right? And so all these, you know, in theory, of course, you want people to help you with trading in crypto because it's a good thing to do, right? But it's really hard unless people are really more educated and they know what they're doing. It's really hard, but you know, that's a dilemma that you always have, because you also want, for example, African people to be able to have this Bitcoin that's amazing because they can trade it and it's not kind of limited and like controlled. But at the same time, when they're not knowing what they're doing, they're just going to keep going online, trying to find someone to guide them, and then they can fool them easily because they're not educated, right? So, I mean, yeah, I don't have all the answers. All I think is that the more platforms exist that really focus on education, that would be the crucial part, you know, because even regulation, it can solve, you know, it can go after the scammers and everything, but we are still a bit of a long way from that, you know.
It's not like there isn't crime in well-established industries. So any industry that's new will suffer even more of that. But that's a more serious problem. I wanted to make a comment, which is, yes, I think you can still do a lot for end users. There are very different techniques, strategies for investing, and some are more tricky than others. That's something that we do as well. We're actually working on delivering some features that will enable you to put out an order to execute on a very simple strategy that we know statistically shows that produces better results, and that's the kind of thing that you can sort of educate your users on, like, hey, this is something very simple that you can do. This is how it works if you want to understand how it works, but in very simple terms, you immediately grasp the idea, and maybe you're not earning as much as you potentially could, but you're also doing a lot less of a gamble than you would if you were just trying to time the market. So I think there are things that you can do for your users depending on their experience, on their patterns, and show them options that they wouldn't find on their own, or it would be very hard for them to find and understand outside your environment, and especially because they might find very wrong or even scams, sort of very wrong information or even scams. So if you can provide that information within your environment, you're educating them on a protected environment where you know that they will not get scammed.
In a bear market, I do feel that, because one of the struggles that, and we already had discussed that, is when you have like suddenly all these people investing, it seems like everything becomes sometimes random, because you did all your studies, you looked at indicators, there's not a reason why this company or this project should be doing that well or that bad. And when you are in a bear market and suddenly some people leave, do you believe that some of the randomness goes away, like the work that you would do, like, of course, in the perspective of a platform that cannot necessarily be good, but in your work as a trader, Francisco, do you believe that sometimes the research and the work that you would do now makes a bit more sense because you have less like this randomness occurring?
Mm-hmm. Yeah, I do. There's a lot of reasons why I think bear market's a lot better than bull market, you know. Like, first of all, people don't have this impression that they are rich and they go all over their heads, you know, because I've seen people saying, you know, oh, I'm rich, you know, and crypto was high and now it's low, and they are poor, which means zero risk management, right? It's whatever the price is, they depend on that completely, which is the first sign that they don't know what they're doing, you know, because you cannot just stay long and just hope for the best, you know. And so, but yeah, the bear market brings a lot of good things. First of all, as you said, kind of, you know, just settling the separation between the people who are building something real and people who are just, you know, building things for a hype. And when there's hype, when there's a bull market, people buy everything pretty much, you know. I mean, I've seen projects raise money last year that were worth nothing, literally, and they were just raising millions easily, you know. And so that's really kind of one of the problems of the bull market. The other is, again, as I was saying, even the employees, everyone, like, just they don't want to work because everyone feels rich because they are buying some crypto. Suddenly crypto has this value, they have more money than ever, and then no one wants to work, right? And bear market really brings that kind of, you know, like grounded people who really want to build and focus, So I do understand for Marco that probably bear market has this problem of the low volumes and everything, because of course it changes, In the bull market, the daily volumes are very different from the bear market. But I would say in terms of the healthiness of the space and everything, it's definitely different, right? Because right now, if you are raising money and you are not going to be able to get away with just like, a couple of random slides and, oh, there we go. And then you just get millions, You need to actually prove something, and not to the level probably of the Web2 world where you need to kind of go through 20 meetings or something, but you still need to prove something. You still need to show that you have a proper product. And for me personally, I think it's very weird that in the bull market, people can raise without, like, people don't even check the teams before investing. So there was literally anonymous projects raising money. And like, how can you think that a project is good without even knowing the team, right? Because execution, the team, the characteristics of the people who are in the leadership is much more important than the idea. You can have amazing ideas, but then you can destroy them easily if you have the wrong people, And so personally, for me, that's what I do. I just kind of dive into projects. In some cases, I'm lucky to know founders and know people. And so, as I was saying before, it's not really inside trading in the sense of, doing something illegal, but at the same time, you kind of know what's happening. You can dive into the financials, see what's happening there, like kind of understand what their business model is, and if they're actually going to make money or not. And it's not going to be just a hype thing. And so that's my preferred approach, to be honest. I mean, it's always about looking at these niche projects, kind of trying to see what can come out of it, look at the leadership team, and decide based on that. Of course, you can use all these technical indicators and do short-term trading, but for someone who's not even educated in it, they're not going to make money, right? It's the Ponzi I was mentioning. It's like someone told you to buy something. When you buy, it's probably because everyone else has bought already, So you're just late and you're just going to give money to someone, right? And so, yeah, I mean, I think the right approach would be start with kind of investment more, like looking at projects, really deep diving into them and understanding them. And then later, maybe try to make some tests with small amounts and just kind of see if you can detect some patterns, because in the end, yeah, it's all about psychology. So of course, it's true. You look at plots and you can actually see some patterns because it's all about psychology, and in crypto in particular, because of course, when people get leverage in the bull market, if it goes down, everyone gets liquidated, and so it's just like, the price can dive a lot because of that, because people are just taking risks. That's it, So yeah, there's a lot that you can be known, but it's not about playing, and just kind of going for it and trying something random and hoping for the best, because that can work sometimes, but then you just start to feel entitled and start to think that you know everything, and it just ends up coming back to you, So I don't think it really works in the long term, of course.
And Mark, a fun question that I had for you is: do bear markets change the way? I don't know how much you are involved with this, but when the background checks that Uphold does within the projects and things that offers within the platform, do bear markets change a little bit? Because, for example, over the last years, a lot of Web3 projects that are based on communities, sometimes it's hard to distinguish the community that a certain project has and how many people are actually using it. Do you guys at Uphold try to make that distinction when you do like the background checks on if this is something people should invest in or not?
So we do have a listing committee that has a set of criteria that we look into when considering whether we should list or not an asset on Uphold. So community is one of those aspects. We want to see how vibrant it is, because that can be also a good indicator of the appetite even for that asset. Hopefully that will also mean there's liquidity around it. So yeah, we look at community, but we look at a lot more than just that, because just community can mean that it was just a project that was able to generate a lot of hype around it, but there's no fundamentals behind it. There's no real roadmap, no real product, no real team, potentially even. Maybe it's just an influencer with an incredible reach that was able to gather a few 100,000 of people on a Telegram group. So yeah, we look at a lot of different indicators, and we have people very expert on the matter. Also professional traders that will look at a bunch of things that I'm not knowledgeable about, but they will ultimately make a decision on whether it is an asset that looks credible, that looks like it has potential, looks serious, and if it feels like it would be a good fit for our kind of audience. So yeah, that's how we do it.
Cool. Very cool. Now I wanted to move the conversation to kind of your personal opinion, which is when a lot of people that trade, they either do it on crypto, but they also probably do it in normal Web2 companies. And in these two situations, you don't have the same amount of information. Like most Web2 companies, they are public. You have their records. In Web3, that not always happen, and most often the case you don't have the same information. What when you do your activity as a as a trader, and I don't know how often do you trade, Mark, but I wanted to see like what is your usual roadmap in terms of seeing or checking if this is a project that it's worth your money. I was going to say your time, but your money, and keeping in a long term or short term or whatever position you decide to make. Francisco, I wanted to start.
Yeah, I mean, as I was saying, I think I was lucky enough, of course, to be surrounded by people, who are founders, who are kind of in high positions in some of the projects you can, just buy and sell, and so, of course, personally, as I was saying before, the first thing is the team, right? So if you have a project that you don't even know the team, I would say that's like that's an impossible investment, But at the same time, yeah, I mean, I would say, yeah. Having been at blockchain.com, I was in touch with many different projects and everything because of also of the listings in our exchange, for example. And so I got to know some people that right now I can check with, and just ask around about, how is this project doing, and I just kind of know who is involved, and I can kind of get a bit of an insider idea of what's happening there, at least. I don't know the exact figures. Of course, I cannot look at their wallets, see if they're doing everything by the book and everything, but if you know the people, you usually know the project, I would say, and if you trust the people who are behind it, I think that's really kind of the most important part. And so for me personally, it would be that, just looking at the projects, like seeing if I know people there in the actual positions that are making the decisions, and that would be the most important part. And that's why I say that when we kind of have this comparison between someone who can actually access this and people are just trying to, they read something on Twitter written by someone they have no idea who it is, saying that this project, oh my God, it's so amazing, and you put some money on that, like some significant amount of money, that's calling for trouble in a way, right? I mean, people just kind of look at social media, and social media became dangerous because of that also, right? Because you can have anyone pretending to have a lot of followers. They can be fake also, but they may not be, but in general, and again, even in sports betting, you see the same, right? You have all these tipsters and people saying, oh, this match is obvious, it's going to happen. There's always a probability. I mean, there's nothing obvious, if someone's saying it's obvious, it's a lie. If someone's saying they won 10 out of 10, it's a lie, I mean, unless it was very lucky, And so that's the thing, I think it's all about kind of the trust that you build with people and kind of trying to really dive into it. Of course, for someone who doesn't have direct connections, you can, as you were saying,
that was going to be my next question.
Yeah,
for someone that doesn't have access to the team, what should they like? Should they just, there's some media that they can try to check out? It has to do with like, what are sort of the resources that you can at least try to make some work to see if it's like it's the indicators that platforms like Uphold gave, like in terms of volume or the tokenomics of the project? I don't know, like what should people pay attention to?
Yeah, I think if you look at just volumes and percentage of variation or whatever, that can be just hype. That doesn't tell you that much, in terms of the long term and everything. But if you have all these indicators, like interesting information about the projects, like of course if you are reading from Bloomberg or for some source that you kind of trust, it's always better, right? Because if you just go on, imagine on Twitter, if you like a project, you are going to be checking news from people that like the project, right? Because there's this bias, right? You're never gonna hear bad things about the project because you follow people who like the project, right? And so you're always gonna hear the best things, and so you're always gonna be biased to think it's gonna go up. It's obvious, but then there can be a whole world of people that's saying the opposite, and so that's really kind of and again, it's not just Web3, it applies to all the social media and like the current world. When you think you are informed about something, you kind of got that information because you try to look for that information, right? So in general, you just get into this point where you just get his opinion and you don't see much more. And I think all these social platforms nowadays have that problem, that just kind of make you even more extreme about your opinions rather than the other way around, And so that's a problem to be solved. And I think if you are really curious and if you are really doing your best to find the right information, you can, but you still need to be very, very mindful that you're going to tend to be pointed to one side, because it's the side where you started, And so, yeah, just be very mindful, of course, and just don't dive on something just because you see 5 or 6 random opinions. That's really what I could say. Yeah.
And your filter, Mark, how does it work?
Yeah, so I pretty much do the same. So one of the first things is I try to understand who the people are behind the project, and that's usually easy to find because you just go into the project website. I mean, you can just Google for the project name, you find the website, and typically they will either, depending on where you are, where the project is, it's either like right in the beginning, or then you have to, if it's a more mature project, you have to go to the footer and you'll find company or about or whatever, you have team, and in there you will see who those people are. And you should also investigate each of those people, at least the like CEO, CTO, that those people. You should see, okay, what have they actually done in the past, and are these real people? That's something to do. I think that's the first thing. Then you have to, just like with any other project, even outside crypto, you have to think if it makes sense. And that's the sometimes the hard part, because in crypto some things are so complicated, and some things are valuable just for the industry itself, like a scaling solution, a token that's relevant for, that's the token for a scaling solution that only really makes sense for the industry itself. So you have to understand first that there is a scaling issue, and once you understand that there is a scaling issue, then it becomes evident that, oh, so a scaling solution is actually very useful. Okay, so but then you also realize there are multiple scaling solutions, so you have to investigate each of those, and that's when it starts to become very useful to follow some publications that will be constantly talking about these things. And that's where, as I said, Uphold Unboxed and the Up of the Day are very useful. You have others like Milk Road, you have TLDR Crypto, you have I'm drawing a blank, but you have many others that if you just Google like top top publications to follow around crypto or whatever, you will for sure find a bunch of reputable sources. You should probably also investigate those a bit before taking their articles for granted. But yeah, you start to see that all of these, especially if they have daily material, you will see that they are most of the time talking about the same thing. So you start to see that, okay, there's a theme here. I'm following the story, I understand the narrative, and you will eventually hear of projects somewhat early on, maybe not like the first. You will not be the first person to hear about it, because if it's in the news, a lot of people already know about it. At the very least, the other people who also follow that publication. But yeah, you start to get information from these channels that have a history of putting out valuable information, somewhat accurate, or at least they try to be accurate. Instead of just relying on whatever signals that you're getting from crypto bro on Twitter. That's where you have to be very, very careful, because most of that is just bots putting out information.
And one of the main red flags would be if you just see that someone's one-sided, just giving you arguments for one side. I think that's kind of a very easy way to check if it's
a bias. Yeah, it's a bias, because most of the times, well, pretty much all the time, you will find arguments pro and con on something. So if someone is unable to present you some of the issues, some of the challenges, if it's all good, if it's all pink, then there's probably something very dark in it that they're completely hiding from you.
Guys, final question. What is your the toughest one, actually? What is your market outlook for 2023? Like, 2023 wasn't an easy year. How do you see kind of the markets performing in the next year? Do you believe that we'll still be in a bear market, or there will be some improvement in the coming months? Francisco?
Yeah, so again, I would start by saying that I always find it better to just kind of look at your long-term perspectives. Like if you didn't look at the Bitcoin price over the last 5 years and you just bought it, you wouldn't have cared about bull markets, bear markets, whatever, right? You just look from the outside and you just see it going up, right? But if you really want to go in that direction, like, of course, people are always curious about that, but I think, there's still kind of an ongoing recession, of course. And I think, as we just saw this week, of course, with the regulation, every time there's a regulation kind of challenge to one of the biggest exchanges, and there's going to be many, of course, because it's not like settled at all, there can always be a point where crypto just goes down again, right? So I mean, what I've heard, and I've been, of course, having this discussion with many of my friends, but I think in the next 6 to 18 months, it's still possible that the market doesn't recover. I mean, we never know because regulation can change, things can just open up. But I do think there's a very strong case for the next 6 months to still be quite painful, even though people thought the bull market was starting. But right now it's not as clear anymore. Yeah, I wouldn't just rely on that, to be honest. I've seen many people coming to me like, oh, I know Bitcoin is going to do like 10x in a couple of years, but in the meantime, how can I get the lowest price? How can I get the best entry point? And I'm like, if you know something's going to 10x, why are you trying to optimize? Why don't you just buy a little bit every month rather than just trying to have the magic ball that no one has, right? So yeah, I wouldn't say I'm sure about these 6 months to 18 months perspective. All I can say is it's likely given the current information. But if you compare these, which is potentially 45% of probabilities against does Bitcoin go up or not? And if you know enough to have an opinion, then of course you should just go for it, even if you think it's going to go down, feel free to short it, of course. But yeah, I think given the volatility is implied, and given that you can really know about what's behind the project and like have a strong opinion, and it's not going to be like another, if you buy a stock in Portugal, it may go up by 20% and it's going to be amazing. But Bitcoin or any other currency, they can go up by 10,000%, whatever, it depends. But the thing is, if you really believe in it, why would you try to optimize that entry point? No one can guess what's the ultimate point that Bitcoin can reach before the bull market starts. But while you are waiting, maybe it doubles, because of course if it's going to 10x at some point, then yeah, it can double at some point also, right? And so then you just lose the boat and that's it, it's gone. And that happened to many people I know. They were trying to get the bottom and then, well, it's gone now it's all gone. It's never going to go back to 3k or whatever. So that's it. And I think, yeah, it's just about being less perfectionist or something, about trying to find the optimal point and just kind of rely on what you know. And if you know something's going to multiply, just buy it. I mean, why would you be trying to just be smart around it? Like, it's just a certainty that you have that's very strong already, right?
Yeah. You, Mark, anything to add? Or on the perspective of the platform, of course, like you will.
Even beyond just the platform, I think the correct answer to that ultimately is irrelevant for most people, because it is relevant for someone like Uphold and any professional in the space, because if when the market recovers, we'll see more volume, there's a lot more opportunity, so it will be a more healthy business. But for retail investors, etc., any time will likely be a good time as long as you're doing the right decisions. And as Francisco pointed out, you should probably not be trying to time the market to hit the bottom, because you will get whatever. If you don't really believe that things will pick up, then you should probably not be investing at all, maybe. So either you believe in the industry and you believe that this will be very valuable in the long term, and if you're long on a position, it really doesn't matter if you enter now or in 15 days or in 3 months or whatever, because it hopefully that will multiply a lot. So ultimately, as Francisco pointed out, what's the problem of getting 9x if you might end up having 0.5x? So you just enter a position if you believe in it. If you don't, you shouldn't. So yeah, I don't really think that answer matters for most people. Having said that, I also believe that we will probably be seeing the market a bit unstable for the next probably 6 to 9 months. And hopefully things will pick up meanwhile. But as we've seen, the market is so correlated with what's happening in the overall in the macro economy. We've seen that where especially Bitcoin is not as safe haven as we at one point thought that it would be resilient to inflation and to macroeconomic effects. No, it's just another asset that traders are using, especially in off hours when the stock markets are down. So yeah, we'll just have to resist through the storm, and hopefully in 6 to 9 months, or hopefully sooner, we'll be in a better position.
Guys, it was really awesome to be talking to you and learning a little bit more about trading. from the perspective, or from the different perspectives that you had. So thank you very much for spending these minutes with me. I also want to thank to whoever was listening to the episode until this point. And I wanted to ask you to not forget to follow DeNites on Twitter and on TikTok. And of course, don't forget to subscribe our videocast on YouTube and on Spotify, where you have all the episodes available. Once again, thank you very much for being here, and good DeNites.